You are listening to the Mark Guzman Podcast Experience. Welcome to another episode of Real Realtors. Today, my guests are Wei Peng from 1031 Asset Exchange Company and Cesar Pena from Rubicon Mortgage. And we discussed today 1031 exchanges in which you as an investor can sell a property and exchange into another property. And ultimately the goal is to avoid paying capital gains tax and transfer your equity into another investment that will make you more money and give you a bigger return in the long run. And Cesar with Rubicon, they are a direct private commercial lender, and they specialize in short-term financing and bridge financing for commercial residential properties, new commercial construction loans, equity refinances, equity cash outs, rehab fixes, and flips. So we got into various topics today, and at the very end, we even got into discussing the market, specifically in the Bay Area, and what could be done to fix it, because as we all know, we do have a shortage. Prices are astronomical, and thus we get into some very good topics in how you as an investor can utilize both the 1031 and hard money loans as tools in order to further advance your investment goals. So hope you enjoy, and let's get started. All right, so we're here for another episode of Real Realtors, and my guests today are Cesar Pena and Wei Peng. And let's get right into it. I want to thank the two of you for being on the podcast here. And let's get a little bit into both your history. So just very briefly, this is a very casual real estate related conversation with one or two real estate professionals, and that's going to be the main focus, real estate. And I know the two of you have very unique specialties in the real estate industry, so I'm excited for this. So Cesar, let's start with you. The name of your company and what you do.
Well, first and foremost, thank you for having us. We're very happy to be here. To answer your question, we're actually a hard money lender. So the company's name is really Rubicon Mortgage Fund, LLC, and we're located out of Lafayette. We specialize in short-term financing. So that is our niche. In terms of financing, it will be considered more like an alternative lender, and that's what I specialize in.
How long have you been there?
I've been there for 4.5 years now, and I started in 2013 as their marketing representative. I was a sophomore in college, and once I started understanding the business, I really, really liked it, and it was more like new. It was always something new. As you know, real estate transaction is never routine. There's always something that comes up, and it just keeps the flow of the business just very entertaining. And it's like watching a new episode of a show you like. You're waiting to see what's going to be the next transaction like, and it gets easier, but it's always challenging, I would say.
Yeah, I would imagine your world is very, very challenging with all the different unique loans that you do. And that's the best thing about the real estate industry is that it's literally new every single day.
Right.
So, Wei, your company, and how long have you been with them?
So I work with Asset Exchange Company as the business development director, and I've been there about 3 years now. Just kind of fresh out of college and into real estate. And what we do is 1031 exchanges. That's a little niche part of just the real estate industry in general. And basically what it does is it's a section of the Internal Revenue Code that allows investors to defer the taxes when they purchase or sell real estate. Sell real estate really, and by purchasing replacement, they can defer the taxes, and we basically assist them, guide them through the process, and just help facilitate that the whole transaction.
Yeah, that's a question I get a lot from, because I do mainly property management. A lot of my clients, and it's one conversation I try to have with many of my clients is, look, you own one or two single family homes. You need to sell these at some point, and move up to a multi-unit building, right? And that process involves selling both of them. And instead of paying the capital gains tax, you do a 1031 exchange and basically transfer your equity into another investment property. Now, sometimes it can be a little difficult to get financing on those transactions, and that's where hard money lending comes into play.
Correct. So when you're dealing with a reverse exchange, that translates really to a bridge loan. It's when you identified a property and you haven't sold a property yet.
Okay, let's break down like the basics first, right? Because we can easily start getting into reverse and bridge loans, but I think for most of the listeners, we're going to have to really break down the basics.
Okay.
So let's break down a standard 1031 exchange. How does that happen?
Okay, so just to give everybody a quick overview of it, there are actually 4 different types of exchanges they can do. First one, it's called simultaneous exchange. It's when an investor wants to close on both the property they're selling and the one they're buying on the same day. So it's called simultaneous. But almost all exchanges, to be honest with you, it's set up as a regular 1031 exchange or a delayed exchange. The same thing. It basically allows the exchanger to sell the property and from the close of escrow have a total of 180 days to close on any new properties that they want to purchase. What Cesar was getting at was a reverse exchange, and that's actually something very popular in the Bay Area, simply because it allows the client to buy the new property first and then have 180 days to sell. Really useful if you don't think you can find something in time. Why don't you just lock in on a replacement first and then take your time selling if you know you can sell your property.
Especially in this Bay Area market where you might be outbid a ton of properties, and you have 180 days to close on a replacement property, but you have to close on a property that you've already identified, correct?
That is correct. So
and how many days for that?
That is actually 45 days into the process of the 180. A lot of folks, when they hear day 45, they think I have to be in contract or I have to be in escrow on the property. But in actuality, it's having the client let us know in writing what properties they're thinking about buying. It's also very important for them to know that after day 45, whatever they have identified to us cannot be changed for whatever reason, for any reason at all.
Okay.
Yeah.
So it's important by that 45th day to have properties at least identified.
That is correct.
And of course, the problem comes into play is in the Bay Area and the hot market. Well, what if you get outbid on each of those properties?
Then, unfortunately, if it's after day 45, your exchange is going to fail because you're not going to be able to buy anything.
So that's why reverse exchange is becoming very popular here, because you could buy a property first and then you sell your property.
Absolutely. And for most investors, they already know what they want to sell. So it's not that hard for them to pick, unless you have 50 properties, right?
Yeah. Now, as a 1031 exchange company, you only facilitate the entire transfer according to the IRS tax code, correct?
That is correct.
Now, the financing part. Cesar.
Yes.
So let's go back to reverse and bridge loans.
Okay.
How does your company fall into place here?
So just as Wei Peng discussed, your client has identified a property that they wish to close on. And on this hot market, you're almost making a cash offer. And so when you go into the conventional route, it sometimes takes up to 45 days to close on a transaction. And most sellers are not willing to wait that long. So they call a private lender. And one thing to know about private financing, it's always best to deal with a direct lender, not someone that syndicates funds, simply because someone that syndicates funds, they call other investors to get into the opportunity for the loan, and then they fund, right? Well, when you're dealing with a direct lender, they manage a pool of funds. So they're not looking for monies. They have the money, and they're willing to move really, really quickly. So on a reverse exchange, that translates over to a bridge loan. So you have really the advantage of making an all-cash offer, really, because the way we look at that is We take property A, the property you're going to sell, and property B, the property you're going to buy, and we cross-collateralize both properties. So that gives you an advantage to sometimes not come out of pocket simply because you have so much equity on that property that you're going to sell. In some other cases, you might have a small loan in place on that property that you're going to sell. And what we really do is we pay that off. And that way we have first deed of trust on both properties. And so that's how that works. In terms of timing, some of these loans close in as little as 4 business days. Others ones close up to 10 business days. So it really depends on the borrower, how quickly they want to move. But as you discussed, it's a hot market. So 30% of the time it's just getting that paperwork in and getting the process in motion. So
now, what are some of the positives, the pros and cons about these hard money bridge loans? Because everyone hears hard money loans, and there are some companies out there that advertise it's super easy to get these loans, but it's not really what people think. There are guidelines, there are rules. What are the basic guidelines and rules?
The basic guidelines, well, it has to be secured by real property. So it cannot be a modular home, for example. It has to be on a permanent foundation, and that's one of the requirements. Also, it cannot be over leveraged, meaning, for example, let's just use rough numbers. Let's say you bought a home for $100,000, and let's say there's an $80,000 loan on that. Well, that's over leveraged, for us at least, for our guidelines. So we tend to be very conservative as a lender. We try to stay under 60 to 65% loan to value on all these transactions. So that would be a second guideline, is to not be over leveraged, and it has to be in the state of California. Unfortunately, you would have to buy and sell in California in order to have a bridge loan. Now there are other types of loans, and we could get into that discussion if you would like.
Yeah, of course.
I mean, there's something very popular now. It's partner buyouts. You might own some real estate on an LLC, for example, and have a couple partners. And let's say that one of the partners wants to keep the property and the other partner wants to sell the property. Well, in the state of California, if one partner decides to sell the property, well, you have to sell it, or you get a loan and you pay them off. Well, it's really tough for a conventional lender to give you $500,000, right, just so you could pay off your partner, especially if that money is not going to go into the property. So private financing could be a resource for that scenario.
So in that scenario, with the partner who wants to do a buyout, they get the hard money.
Right.
They buy out the person.
Mm-hmm.
You guys come in as a first deed of trust.
Right.
And then at that point, now with hard money loans,
Mm-hmm.
is there a time frame that they have to refinance out of it, or can they keep it long term?
It really comes down to how much time they need. So we could customize a loan to where it's a couple months or a couple of years. There are some requirements on that, though. It has to be business purpose or an investment purpose property. It cannot be owner-user, simply because that falls under trade regulations, and really that's more of a consumer loan if you were to live in the property. So most lenders, if not all, hard money lenders, they will stay away from an owner-occupied property. The only way we could touch an owner-occupied property is really it's a bridge loan, again, simply because it's a business purpose. You're going to sell and you're going to buy, and the way you're going to pay me off is on the sale of the relinquished property.
Okay. Mm-hmm. Now on the 1031 side, if in that same scenario you have two partners, one of them wants to sell their portion and move their funds to a different investment, can you do a 1031 exchange with just one of the partners?
Yes, you can. You absolutely can. So we encounter those all the time. In fact, we're assisting a client with doing the very same thing. But one of the things to look out for when you're doing an exchange with partners or without a partner is how they're holding title. So if they're on title as joint tenants or tenants in common, once they sell the property, they'll take their funds and they'll go separate ways. One can do an exchange, one doesn't have to, or they can exchange together as well. The complication arises when they're in a trust or when they're in an LLC or some sort of partnership. because for any 1031 exchange, the taxpayer who's selling has to be the taxpayer buying as well. So if you have a two partner in an LLC, the LLC is technically the taxpayer selling, so the LLC has to buy. And in that instance, they aren't able to go their separate ways. So for investors thinking about maybe potentially parting ways in the future, it would be better if they dropped out of the LLC and took title in their own names.
Interesting. I know a lot of people that hold real estate in LLCs, corporations, and I did not know that it's better to. So you would have to basically dissolve the LLC, transfer the property into your own name, and then at that point you can do a 1031 exchange.
That is correct. But ideally, what you want to do is then hold the property in your own name for at least a year, for the holding period to be at least a year. Because if you do it in shorter than a year and you're trying to do an exchange, that's actually what's called a drop and swap. And that is something that the Franchise Tax Board is very aggressive about in California in auditing it. And if you try to do an exchange with that, you get audited, very high chance of it getting disqualified and you having to pay your taxes.
So there would have to be an extremely, extremely good reason why. And there's probably 99% chance you don't have a good reason.
Well, we never know. With investors, we never know. But what we do advise is minimum of 1 year of holding period before doing the exchange.
Okay.
Recommended 2 if you can.
Okay. Yeah. And that's something to really think about because a lot of people hold properties in LLCs for liability reasons, right? To protect their own personal assets.
Yeah. And so going back to our example at first with 2 partners in the LLC, when they dissolve that LLC, they can actually take title under their own separate LLCs that they can then set up. As long as it's set up as a pass-through entity, maybe a single member LLC, you can then have, say, 2 LLCs on title, each of the partner owning one of them. And that'll still count as them because it's a pass-through entity.
Oh, interesting.
Yeah.
Okay, so they can just split it apart into 2 LLCs that pass through to their individual tax returns, and then from there, they can then do a 1031 exchange on their portion.
Yes, but they would still have to hold it for that year.
For a year
period,
under their personal name.
Yeah, but it still gives them that additional protection that they wanted from an LLC.
Got it. So then if one partner doesn't want to do the 1031 exchange, but they still want themselves covered under the LLC corporation protections, they can split up, create 2 LLCs. The one who wants to do a 1031 exchange would actually put it into their personal name for a year, and then at that point they can do a 1031 exchange.
That is correct.
Got it. Okay. Very interesting. This is why I like these conversations because these are a lot of things you don't really hear from, many of the brochures or videos that you see about 1031 exchanges. Cesar?
Well, I was going to say, it's something you don't think about every single day, but there are steps during the way where you want to do an exchange and you really need to have a good understanding. I've been using Asset Exchange for a number of years now, and I want to say that, they're very knowledgeable in what they're doing. There's been various times where they have really interesting requests in terms of partner buyouts and how they want to split the assets. And really, I find it really hard that a conventional lender will actually land on some of these scenarios. So I say hard money is more, you got to see it more as a resource. We're not your first time call. You're going to call.
It's not going to be a 30-year loan that you're going to get.
Exactly. It's going to be something more like 6 months or up to 2 years. And in some cases, I've seen up to 5 years, but that's very rare. Most of the cases under 1-year loans. And so private financing has really changed, especially in a hot market. You don't longer see double digits in terms of rate. Some of these rates are as low as 7%. Other rates are
I remember, and this was years ago when I first started in the business, but I remember some of the rates, I would see them at 15, 16, 17% for hard money loans.
You're absolutely correct. It used to be like that, yeah.
So now they're about 7, 8%?
7 and, yeah, in between 7 and 9%. I haven't seen really anything higher than that. Of course, there's 3 factors that go into play. And that is how long do you need a loan for, what is the dollar amount, and what is the property type. Those are three factors that we really take in consideration to price a loan. But if your request is a 6-month loan, it's going to be priced really aggressive. It's not going to be really expensive.
Yeah, and if you figure the cost of having a 6-month hard money loan and using it as a tool to then maybe eventually refinance out into a 30-year mortgage or whatever you're trying to do as an investor, right, the costs can be very minimal.
Yeah.
Because it allows you to then at least do what you need to do.
It gives you that peace of mind that you're going to close on that property. And, that's priceless, at least to some investors. You might really, again, you might be doing an exchange and, you're down to day, what's 180, right? So you're down to 170 and you have 10 days to close. Well, you got to call a private lender for that, or unless you come up with all the cash. But private financing is last minute resource. That's when you could count on us to really come and execute the contract.
Now, someone looking to apply for a hard money loan, mm-hmm, I know for sure you guys take into consideration the property, but what about the person's financials, credit score, income?
Those are good questions. So 90% of our underwriting is on the real estate. In most of the cases, it's commercial real estate. So we look at the income that's coming, the net operating income, and we also look at the loan amount. So can a debt service itself? If it can't, then we try to have a better understanding from the borrower. Well, what's your exit strategy? Because the last thing we want to do is put a borrower in a scenario where they're stuck and they can't get out. We'd rather not do the loan. We'd rather just pass on it. So in terms of the income on the property, some of these investors already have other assets. There is not, your first time building that you're buying. It's more like someone that's already seasoned. So we also look at other properties and see if there's income to cover the debt that's in place. In terms of credit score, we don't really look at credit score. We don't even run it, actually. We don't even take it into consideration. In terms of financials with the borrower, they could literally have 2 days out of bankruptcy. As long as the property makes sense and it's going to pay for itself, then we'll do the loan. And then this applies to foreign nationals as well. They don't have financials. They don't have credit score. They don't have income in the States. Some do, some don't. So this is why we're not an over-leveraged lender. We try to be conservative because, they're putting 35, they're putting 40% down on these acquisitions. So we find it really hard for them to simply walk away since they have so much down. So they're going to find a way to refinance in the future, 2 years out, and we're more than happy to line up to 5 years. It's really what they need. And for example, I've seen a lot of loans where they request a 1-year loan because the rate sounds great. But, a year comes down the road and they haven't been able to refinance. Well, we're more than happy to extend. So it's not like we're going to foreclose on that property if they've been a good borrower.
Okay, so it sounds like it's really, you guys play it by ear. It's tailored to the customer for what they need, but you're also a little bit flexible in what you can do to make sure that they're able to get to where they need to get to as investors.
Right. In 10 years of business, if I could recall, we've only taken back 4 properties, and we lend about 80 loans a year. So wow, we're really, really, our track record is really clean. And I think 2 of those were note purchases. So, we thought we were going to, we never, did the loan because it wasn't going to work out. We thought it was going to work out for the borrower, but sometimes they just decide to walk away on.
So I think that's a very interesting market, note purchasing.
Yeah.
You see, and I always crack up when I hear that, because if you stay up late at night in the infomercials, mm-hmm, there are a few companies that just advertise heavily on buying notes, and you buy a note. Now, a lot of these notes are like, they're smaller notes, like Midwest, and then they have another version where you buy notes and then you buy tax deeds, and you pay all
Right.
the taxes, and then you get a property that's worth 80 grand for like 2 grand, right?
Yeah.
Yeah, so that's an interesting market, buying notes. So now you guys don't do a lot of that, do you?
Vaguely. It's very, very, very rare. It would be at a huge discount for us to consider it, but there's been times where we have, but it's not something that we specialize in. No, we try to not to do that. If we have to, I mean, if the opportunity comes up and makes sense, we'll consider it. Yeah.
Yeah. Now, Wei, have you been to our office before to speak here?
Yeah, actually, I've actually spoken a couple of times at Jack Burns' Security Pacific Real Estate office regarding 1031 exchanges. Just updating their agents on how they can use 1031 exchange, the information in assisting their clients with it.
Now, you do quite a bit of seminars. What do you try to focus on in your seminars for clients? Because I would imagine most of the people showing up are not really 100% familiar with 1031 exchanges.
Yeah. So one of the things I focus on is the different types of exchanges that investors can do. When they think 1031, they don't think, they only think, I'm going to sell, I'm going to buy. That's my only option. They're not thinking about reverse or even a construction exchange. And there are, just ups and downs with each type of exchange. Things to look out for, like the drop and swap issue we just discussed. And it really depends on each individual situation. And what we try to do is we try to cater to each individual by walking them through the process and just assisting them any way we can.
Okay.
I think Wei Peng you should elaborate on the new changes for 1031. I think that's been a very popular topic this year.
Are there new changes for 2018?
Yeah, there actually are. For 1031 exchanges, it's actually not just for real estate. It's for personal property as well. So, for example, if you have a classic collectible car, you can exchange that for other collectible cars. If you sell a business, certain aspects of the business can be exchanged. For example, if you own a hotel, maybe even a motel, you're selling it, you could exchange all the beds for new beds if you're buying into something similar, like maybe another franchise or another hotel. But with the new changes that they're proposing, they could do away with personal property. So it's going to affect individuals who have businesses or have other types of personal property. So essentially, it's limiting it to just real estate.
Okay. Now, I didn't know you could do 1031 exchanges on like collectible cars or personal property.
Yeah. So that's actually something that I think because we're in the real estate industry, we don't really hear about that. But there are folks who do that. They'll exchange, for example, livestock as well. If you have, say, a milking cow, you can exchange that for another milking cow. But with the new changes, obviously, that's something they may not be able to do anymore. So that could potentially impact thousands of investors out there.
Wow.
Now, do you know if they're going to limit in terms of value?
No. So there's no talk on limiting the value of how much you can exchange. So in that regard, we're safe.
Okay.
Wow. So I want to get both of your opinion on the Bay Area market.
Mm-hmm.
What's causing these prices to be so high? What can be done to fix it? Or what needs to be done to fix it?
Well, let's start with inventory. It's very low. And, I mean, everything is just, it doesn't, if it's priced right, it doesn't sit on the market for that long. And, there's a lot of cash in the Bay Area. I mean, you have, a couple billion just in the Silicon Valley, just sitting there. And I think we did a loan a couple weeks ago where it was a 1,200 square foot home, and it was trading at 1,500 a square foot. Teeny house. And,
Wow.
and it sold within, I think it sold within 2 weeks. Like it was done. And and that's what we're seeing. It's, low inventory, and then you have these, guys coming out of college and making 300-400 grand a year, and they're like, okay, well, what can I buy? And the sad thing is that a bank doesn't almost see it like that. They want to see their credit score. They want to see debt to income. And that again applies to private financing. Is unfortunately we cannot do owner occupied, but sometimes these individuals are buying multifamily, like 5 units, for example. That's the smallest property you could get into the commercial arena. But in terms of, to your question, low inventory. Nothing sits on the market for more than 30 days, I don't think.
So what was the price per square foot on that property you mentioned?
1,500 square feet.
Wow.
I'm sorry, $1,500 a square foot.
That's just crazy.
It is.
Do you guys know Alex Wang? He's a real estate broker out of he works in the Peninsula, Silicon Valley area, and he's got a video of him remodeling this house, and he's in the front yard, and he takes a knife and he draws basically 1 square foot, stabs the knife into the ground, and says, "This is $500."
Nice.
It's a great video, but I mean, when you look at the entire property, and when he does that, it really gives you a visualization of like the true costs of land in the Silicon Valley. It's ridiculous.
It's outrageous.
And then you have companies like Apple that have more cash than our government on
Yeah,
hand.
you're right.
And companies like Apple, Facebook that give a stipend to their employees to live closer. Now they're making 100, 150 grand or more per year, plus they're getting a $1,000 to $3,000 a month stipend for housing.
Right. I think we're gonna see another strong year to come. I mean, think about it this way: there's not much unemployment in the Bay Area. Unemployment's pretty high.
We're at what, 4%?
Yeah, if that.
3% something.
Yeah, if that. So until we see a cutback, I don't think this is gonna go anywhere. I think it's gonna be pretty steady. That's just how I see things, and let's just hope that it stays steady, right?
Now, on the 1031 side, are you able to see market trends based on the number of 1031 exchanges you guys handle?
Well, to be honest, it's for us when we see a trend like that, it's not more of where people are going, but rather what type of property folks are trying to get into. For me personally, when I'm doing the exchanges for clients, kind of take a mental note, like, are they buying into single family? Are they buying into multifamily? And we're just seeing a lot of folks who are selling their real estate now, buying into multifamily. And I think the other reason is they don't want to manage it anymore. They'll get a management company to manage it, or they'll exchange into something easier to manage. So that's one of the attractive things about the exchange is you're more than welcome to sell multiple properties and combine those funds and buy one large property that's, again, easier to manage, or maybe that's even closer to you.
Okay. Now, what about your opinion on the market? What do we need to do to fix these prices? Or I've got a different question. Do you see an adjustment coming soon? Because it seems like a lot of investors are praying for an adjustment because obviously then they can buy a cheaper property. Do you see an adjustment coming?
Well, we've been hearing that, from real estate professionals that they expect to see it in the next 2 years or so. But with the prices as they are now, it's really hard to predict exactly when, just because they keep going up and folks are getting priced out. We're seeing, sort of a movement towards the East Bay and beyond that, because of, like Cesar said, companies in Silicon Valley, they have all this money, and as you also mentioned, they want their employees to be closer to work. So, unfortunately, probably not anytime soon. Yeah, not anytime soon.
We thought there was going to be a correction this year because all the new president coming on, and all these tax reforms, but really it's not. It hasn't done much. I think it's still really a hot market, and this goes from San Francisco down to I should say up to Sacramento. I mean, you're starting to see really expensive housing in Sacramento, which it already passed the number that it was in 2007. So a correction, maybe like you said, maybe in 2 years, but I think it's going to be really steady next year.
Now you bring up Sacramento. Sacramento's a hot market right now.
It is.
And just looking at rental prices out there, I just rented out a property that my client bought for $75,000.
Mm-hmm.
He did like a $20,000 remodel on it, so he's into it for $95,000, and we just leased it out for $1,300 a month.
Wow.
And I mean, that's the kind of returns right now Sacramento's getting, and it seems like there's people that are starting to realize that, and they're starting to really look into Sacramento and start to buy up property out there. But even if you look at downtown Sacramento by the Golden One Center, and just that whole downtown has changed a lot. They have condos now for like $2-3 grand a month.
Yes, they do. New housing. I mean, in Walnut Creek too. I mean, you're starting to. If you go to Walnut Creek, you probably see like 5 cranes in the air right now.
Yeah,
there's just so much building going on, and this goes to every popular area. San Jose, in the city. I mean, it's just amazing. And now Oakland, and we're starting to see the spillover in towards Hayward, Castro Valley. Those areas are now, the new investors are coming in and just cleaning up those areas. So we're seeing a lot of cleanup lately, and I think we'll continue to see that too.
Now, the two of you are young guys. Were you guys in the business when we had the financial crash in 2006 and 7?
Actually, no. Was still in college. Oh, well,
in high school.
High school, actually. Still in high school. Yeah. So I think we kind of started in the industry probably close to 2012, around there.
Okay.
Yeah. So how I got started with Rubicon, I met one of the principals at Rubicon in the Orinda Country Club. Now that I think about it, I was 16 at the time, and his name is Vance Hillstrom, and we hit it off, and I want to say this is the longest interview ever, because it wasn't until 2013 that I started working for him. So if you really think about it, that's a couple of years there, and so I want to say I've been in it for 4.5 years now, and I've learned so much, and it's really interesting how in 2011, if you look back, you were looking at properties in Concord selling at under $200,000. Now those properties are now $550,000. So it's really fascinating to see the trend, how it's come back to life, really.
Yeah.
And so.
Yeah, and a lot of the people that bought in 2010, 11, 12, they've made a killing.
They have
on their real estate.
Yeah.
But that's when they have to take those properties and exchange them out and buy bigger investment property to make more. I mean, I have some clients that have owned property for 35, 40 years.
Yeah.
And I mean, they can't even take the depreciation deduction or anything off of it. And I'm trying to explain to them, hey, you have an opportunity here because they own multiple properties, exchange them out, get into something bigger. But I think when you own property for 35, 40 years, the same property, it's kind of like, you're not going to touch it. Just leave it there. I'll let my kids take it over, and then they can do what they want with it.
Yeah. And you're starting to see, Weiming, you're starting to see more of people selling in the city because of rent control.
Yeah. So, places with rent control, a lot of folks have owned their properties for a long time, like you said. And because of rent control, they're probably not getting what they would expect from such a high value property. And the 1031 exchange allows them to exchange anywhere in the United States if they sold in the United States. And so they can go to other states where, the returns may be 8-9% if they manage it themselves. Or even, like you said, go to Sacramento where the market is hot. And in anticipation of that, they could get a huge value increase over the next couple of years.
Yeah, I have some clients because, Richmond just passed rent control, and I have some clients that are thinking about selling, but what's unfortunate for them is that their rents got rolled back to 2015. And so their building was worth, let's say, $600,000 on December 2016, but January 2017 with the rollback, now it might be worth $450,000 or $500,000.
Oh, wow.
Yeah, because investors are only going to pay based on what they can collect, right?
Exactly.
Simple returns.
Yeah.
And now they're collecting less money because of rent rollbacks.
Mm-hmm.
And so a lot of them are looking to possibly sell. The problem is they want to sell for $600,000 and they can't get that anymore. And now they're stuck in that, I call it the in-between, where you're just in your mind trying to like deal with the situation that you just lost 100 or 150,000 in equity. But you brought up a good point where they can sell it and move it to a different state where it's cheaper, and then you can get the same or better return on investment, because it all comes down to your actual cash on cash return at the end of the day.
Yeah, absolutely.
Okay, well, I want to thank the two of you for being on the podcast here. So go ahead, Cesar, we'll start with you. State the best way people can contact you. We'll link up your contact info, descriptions, wherever this podcast goes. But just for audio, what's the best number for them to reach you?
Well, thank you. Yeah, so as you know, we're always on the road, so I think the cell phone number is really more effective than the office number. So I would say 925-239-6609. That's where you can reach me. And if you have any questions, feel free to reach out to me in terms of private financing. Thank you.
Yeah, well, thank you for having us here, Mark. And you can reach me at 415-992-6120.
Perfect. Well, thank you guys.
Thanks
Thank
again.
you.
That was fun.
Oh, thank
Yeah.
you.
Thank you to our producer, Sam Lemon, for putting together another great episode of Real Realtors. Hopefully you guys learned a lot. Contact Cesar, contact Wei, and if you need their services, their contact information is linked up in the description. So thank you again for listening. Please subscribe to the podcast, like, comment, share. And again, any feedback you can provide to me would be greatly appreciated. Thank you. I really want to thank all of you for listening. It means the world to me, and I hope today's episode provides you value in your day-to-day life. I created this podcast to help showcase the many great people that live in this world and help share some knowledge that I've learned along the way in life. Again, thank you for listening. Check out our sponsors, and I'll catch you on the next episode.